So we begin with our unit 3 on cash management. This unit is divided into two parts. Part A is cash management, whereas part B we are going to learn also something called the concept of receivables management. Now we first try to understand certain theoretical concepts in cash management, and then we also move on to preparing a sort of a cash budget in the receipts and payments method in order to calculate the requirement of cash during a given year. Okay, now let's first understand the most basic concept of what we mean by cash. Okay, so in this unit of cash management we are going to look at words like cash or cash flows. All right, then we're also going to see certain strategies that are used in order to manage your cash flows. So what do businesses do in order to make sure that they have enough amount of cash in the business at all times? Okay, so first things first, let us understand what we mean by cash. Can anyone tell me what is the first thing that comes to mind when you hear the term cash? You can unmute yourself and speak. What does cash mean for a business? Let's talk from the business point of view. For a business, what is cash and why is it required? Yes? Why do we need cash in a given business? If you would want to even type your answers, okay. Cash, fine, you need it for capital, very good. Initially, when you begin your business, you require some capital in the form of cash. So basically, it's money. But in this case, when we say cash or we talk about cash balances or bank balances, we are talking about cash that is available in the liquid form. And liquid form means it is already in cash, right? It is already in the form of currency. We are not talking of funds in general. Understand that there is a difference between funds and there is a difference between cash. Okay, so both of these things have a sort of there is some major difference between the two things. When we say funds, it includes a lot of things. It could be in the form of cash, or you may be even have it in the form of certain assets. They're still funds, like working capital funds. They are available to us in the form of even the stock, the debtors that we have. They are also funds, correct? But when we say cash, it is the liquid cash that is available to us at any given point of time. Fine. So when we have or when we look at the balance sheet of a particular company, we will always find cash in two forms, that is cash in hand and cash at bank, and we will find it under current assets, correct? So this cash is already in the form of either currency, or maybe we have it in the form of checks that are still lying around and have not been deposited, or it may be in the form of balance that we have in our bank accounts. That is what we mean by cash in a business. Okay, so it can be, like I said, currency, that is loose cash or liquid cash that we have. It can be checks which we have already received from all our debtors. It can be also the money that is already deposited in a bank account and we have as a bank balance. So cash in hand, cash at bank. Fine. So it's a current asset, and the cash flows in and out of the business in different ways. Okay. We have this concept called cash flow. Fine. Now the movement of cash will decide whether it is a cash inflow or it is a cash outflow. Fine. So what does this mean? Whenever cash comes into the business, okay, in any form, maybe it is brought in the form of capital by the owner himself. Maybe you have taken a loan from some bank and brought cash into the business. That is called a cash inflow. Okay. Whereas when the cash goes out of the business, maybe you're paying salaries, you are paying, repaying some loan, you are paying your creditors for raw materials or suppliers, you're purchasing assets or any other thing, you're paying taxes. This is outflow of cash. Okay, it is the manner in which the cash goes out. Is it clear? Now, remember that cash flow is not the same as calculating of profits. It's not the same as profits. When you calculate profits, you are taking both type of expenses. You are taking cash expenses as well as non-cash expenses. Like for example, I have a profit and loss account over here. Let's take a look at it. So here you have cash, that is different expenses and incomes that are given to you. Okay, and of these there are some which are cash expenses, there are some which may be non-cash expenses, correct? For example, purchases. Okay, of these purchases also there could be some that are cash purchases, there can be also some that are credit purchases, so they're non-cash, fine. Or there can be things like, let's say, depreciation. Depreciation is a very clear non-cash expense. There is no cash that is exchanged when you depreciate an asset. It's just the reduction in the value of an asset, right? So it's a non-cash expense. So when you are calculating this balance, net profit or net loss, you are taking into account all types of expenses and incomes. Whether they are cash or not is not a concern here. You take both cash as well as non-cash type of expenses and incomes. Okay. Whereas when you are talking of only cash flow, right, you will take into consideration only those expenses or incomes which are in the form of actual cash. Is that clear? For example, examples of cash inflow. Let's just fix this. Okay. If we talk of cash inflow, we have things like capital. These are the different ways in which cash comes into the business. So capital, the owner might bring in some capital, so in the form of cash. He's getting his cash or all his savings or some money that is borrowed from different people and he's putting it into the business, right? Then when you sell something, you especially when you sell something for cash, and even if it is for credit, you know that the money will be paid later. So sales are type of cash inflows. You sell the goods and you bring in the money into the business, so it's an inflow of the cash. Same way, if you have taken a loan or received a loan, that is again cash inflow. The moment you take a loan from a bank, the bank transfers that money into your bank account. Isn't it? A loan account is made and you are provided that money. Correct? So that is again cash inflow. The money, the cash is coming into your business from this bank which is giving you the loan. Fine? And same way, even debtors who pay us our money, they are cash inflow, right? Or any other type of things, incomes like commission received, these are also cash inflows. Now, what are outflows? What are the different ways in which cash goes out of the business? Can you all tell me? You may type it out in the chat box. What are the outflows and different ways in which cash goes out? In what different ways? What do we pay cash for? In what manner does cash go out? Yes, very good. Purchases. Purchases of your raw material, of fixed assets, salaries, very good. A very common expense that requires the payment of cash. Okay. See, understand one thing, students. I know we're using the term cash, but cash doesn't mean only cash payments, as in giving currency or giving certain denominations to people. Okay? It can also mean making payments in check or making bank transfers. They are also cash payments. Have you followed? Like, say, for example, let's say you are making payment of your salaries to your employees. Okay. Nowadays, hardly anybody gives salaries in cash, right? Like nobody will give you 10,000 or 15,000 or whatever, like in currency, notes of 10, 100 rupees, notes of 500 rupees. They will normally do it in either in the form of a check, especially if it's a big amount, you have to give a check, or you have to make a bank transfer. There has to be an NEFT transfer from the employer's bank account to the employee's bank account, right? Now, when bank transfers are made or check payments are given, that is also called a cash outflow. Just because it is a bank transfer or a check transfer doesn't mean we will not use the word cash. Okay, so it's not like in accounting where we use cash and bank differently, but in the most general sense we say cash outflow. Cash has gone out. Even if it is gone out through the bank, we say cash has gone out. Is this followed? Okay, so similarly, give me more examples. How else does cash go out of the business? What else do you pay? Rent, very good. Rent payments are made by the business. Paying bills like water, electricity, all type of utility bills, very good. Then what other way? What other outflows are there? Very good. Creditors. If you have people from whom you have purchased on credit, your suppliers, they are waiting for you to make the payment, right? So eventually, when the maturity date comes, you make the payment in cash. Check or cash, but it is a cash outflow. Same way, you may be also paying taxes, isn't it? We pay taxes to the government. So again, those are a cash outflow. You make a challan, you pay certain taxes either through your bank account, or you go, to the bank or to the wherever the offices or income tax offices, and you actually make those payments. Fine. So again, that is, taxes are a cash outflow. Okay. So all of these examples that you have given, excellent examples. Salaries, rent, taxes, all utility bills like electricity, water. So basically, all the manufacturing overheads, they have to be paid out in cash. And similarly, other expenses, all selling expenses, sales promotion expenses, distribution expenses, administrative things. Okay, all of these become cash outflow. Is that clear? All right. So that is what we mean by cash itself, and the manner in which cash moves in and out of the business. This whole cash flow concept is important, because if we want to learn how to manage cash, we first need to know where the cash comes from and how the cash goes out, right? And accordingly, we can plan, we can have strategies to make sure or to manage the manner in which this cash goes out and comes in. Because our goal here, our whole objective here, is to make sure that the business has the required optimum level of cash. I always tell y'all, even in the previous few chapters, we have over and over again studied the concept of management. We say financial management. We say working capital management. Okay? And once again, now we have cash management. So, like I told you, management is nothing but making optimum utilization of a resource. In this case, in this concept, that resource is cash. So cash management would basically mean making optimum utilization of the cash, making sure that you maintain an optimum level of the cash at all times, right? You can neither have too little cash in the business, nor can you have too much cash in the business. The flows, inflow and outflow, have to be managed in such a way that at all times the cash is kept at an optimum level. Okay, so this is pretty much the summary, a sort of an abstract of what we are going to study in the rest of this unit.